if I fall out of my routine, it's very reflective in my results.
Why am I doing this to myself? I'm the one pulling the trigger. Why am I getting into this trade?
If you're getting to the stage where you're able to turn, 3-5% a month, you are an amazing trader. Like, you are doing great.
Welcome everybody to another episode of FundingTraders. Today we have a trader with us, and without further ado, I'll let Sean introduce himself. I'm sure you'll find a lot of useful, interesting information today. So Sean, if you want to briefly just describe, to tell us a few words about yourself so we get to know you.
Yeah, so first of all, thank you so much for having me on. I know it was last minute, so it's great to get on a call with you. But yeah, so like I said, my name's Sean. A lot of you would know me from ConquerFX, off Instagram or Twitter. At heart, I suppose I'm a statistical price action trader. So I'm looking for a lot of kind of repeating patterns in the market and peeling them apart to kind of find its sweet spots and edge. I do keep the macro outlook in mind, but 80% of my trades are very much based off some sort of statistical decision, statistical edge. Kind of got into trading when I was around 16, but I would say it was probably more of a hobby back then. Always kind of like the idea of working for myself, and always was trying to, kind of start up businesses and things like that. And when I went into college then, I was trying to start a startup at that time, basically helping entrepreneurs raise seed investment through a crowdfunding platform. And then I kind of discovered trading at the same time and realized that, like the way everyone else kind of gets sucked in, that it looked appealing, easy money. Why am I working on this startup and blah, blah, blah. And, then I ended up kind of going down that rabbit hole a bit more, and things got serious, and I got myself a mentor. And that's kind of the short version of here we are today,
Yeah, well, as they say, there is I don't know who came up with this idiotic phrase, but there's a thousand ways to skin a cat. So meaning you trade using more statistical, mathematical, quant approach towards trading, and we had previous traders go the other way, some fundamentals, some more technical, and everything in between. And that's the beauty of the market. There's no right way or wrong way. Well, there's a wrong way. That's losing money. So as long as you're producing that quarterly P&L in a green, then there's lots of ways to accomplish that task. And it's actually very interesting to hear how you approach it, and specifically to FX markets, correct? So you're not trading stocks, so you specifically, right? So I think a lot of people get that appeal of the markets at first. Obviously, we all go there not because if you have an entrepreneurial spirit, people love to. One of the beauty of trading for yourself or be self-sustainable trader, even if you're trading for a hedge fund or whatever, is that you rely solely upon yourself. So if you have that A-type personality where you're okay with, there's no safety net, so to speak. You produce, you eat what you kill. It's a very meritocracy based living, and that's what appealed to me as well. And because I find it very fair, right? There's no coming to the office, you're tired, so you kind of pretend that you're working, but you're half asleep at the desk and blah blah. There's none of that. You can sleep at your desk. It's just nothing's gonna happen. There's
no, and
right.
The market is ruthless that way. I think it really does show your true qualities, really, like where your weak points, your lack of focus, your lack of discipline. It has no time for that. It doesn't care who you are, what race you are, what religion you are. It's completely down to you. And I love that quote where it's like, you're in your situation today because of you and only you. And it's the same with your trading results. It's like every decision, it's on you. Nobody else pulled the trigger. No one else done the analysis or the research. Exactly. Every decision is down to you, and your results obviously will reflect on that decision making.
Exactly, and there's no, like I said, there's no hiding. So you know that you're the one who entered the trade, and you knew that you shouldn't have entered certain trades, right? We all go through that. I call it the rented mule model. We all make mistakes until we're so fatigued from doing it over and over and over again. Like, why am I doing this to myself? I'm the one pulling the trigger. Why am I getting into this trade when it's times and times again this specific trade it becomes a headache? So this is how a lot of, and that's part of the learning curve and part of the process of growing, because we all have egos, and market is excellent at beating ego out of you in a very ruthless, efficient manner. And that's again, that's the beauty. And I found that a lot of things that were my handicaps in trading, once I started doing better in trading, it actually improved my life outside of trading as well. I don't know if you've noticed that about yourself, but from me playing the way I play tennis to pretty much every aspect of my life, because the discipline that it requires you for you to stay focused and stay the course, not to mention the thick skin that it makes you develop. You become like an elephant.
Yeah, it's
So,
you know, my mentor used to say to me, he was like, the market hands you your shit on a plate and says fix it or the toxic cycle never ends. And
right.
you know, it's as true as that. You know, it's like you said there, it's that pain factor. Sometimes a lot of these people who are coming into the space, they don't realize that probably a lot of the time why they keep making the same mistakes is because it's actually not painful enough yet to stop. And
Right.
it's kind of, you know, the unfortunate psychological side of things as well. It's really only when you kind of get sick of your own, you know, nonsense basically, and you kind of wake up one day and you say, I need to stop this. I need to get a mentor. I need to get proper education and guidance, and stop making these impulsive decisions and develop clarity around what I'm trying to do. I think that's the only way.
Yeah, I completely agree, actually. And what I usually recommend to all the people who are starting on their journey, don't just buy a course. Most of the information on YouTube is crap, but most of the paid courses are also crap. So there's absolutely no reason to buy courses unless that person is also kind of a mentor. So he can offer you a course, but he's also going to guide you within for X amount of period of time, because mentorship is what you should be seeking, not just buying
100%.
courses blindly and thinking next week you're going to be making money. So if you can just maybe expand a little bit, so you started dabbling with trading when you were 16, then you went to college, entrepreneurial way, and how long did it take you to get serious with trading, and how, maybe if you would how would you go if you were starting now? How would you go about finding a mentor, or how would you improve on your journey if you would have to cut out the time that it took you to get to where you are?
Yeah, so I think, you know, everything that you're even saying there about, it's not just, don't just try go for a course, try to get someone that can actually guide you, because there's the other aspect of having a mentor that really, really, you know, accelerates your learning curve, that they're going to call you out on your nonsense all the time. You know, if you have a mentor that's very hands-on with you, especially, and, you know, who maybe is doing a monthly review, a weekly review, quarterly, even whatever you can get, you have that accountability partner as well. And there's another side of it, and you know, it's a great question that you have, because I've only actually did a post recently on this as well. You know, if I was to start again, and essentially I would just accumulate as much information as possible and try to learn as much about the business that I'm about to, you know, to play gay ball in, and then essentially go and get a mentor to structure that chaos of information into a manner that is, you know, a consistent, repeatable process that allows you to take profits from the market, you know. I think a lot of the time people nearly have too many options available. There's too many options. And when you have too many options, anxiety increases. And, you know, usually that's because they have no strategy. So I think the best way to do it is accumulate as much knowledge, see what you know, resonates with you, whatever style, you know, do you prefer more of a scalping, a swing, positioning, see if that even fits into your lifestyle. You know, you see people kind of making these scalping strategies, and then, you know, they're trying to balance and place the trade on their phone, and, you know, try to fit the strategy around your lifestyle as well. And like I said, you know, get a mentor to help you with that process.
I completely agree with the mentorship aspect of things, and I've well, how does your schedule look like nowadays? Since you mentioned scalping and swing trading, and what's your daily process nowadays? For example, from waking where you live. So you live
Yeah,
in
so Ireland.
right.
I'm Irish,
So
so
you're lucky. You can actually wake up 6 a.m. and then you still have time for markets. I have to wake up at 3 a.m. and
oh man.
one of our mutual friends, Robert, I tell him all the time, all the New York bank traders, I call it fucked for life, because we all have to be waking up at 3 a.m. from our 20s to our 30s, right? And then basically you develop this habit to at least open your eye, check, well, before the phones will check computers and stuff. But yeah, so at least you can wake up early. But tell us how you go through your day. Well, what's your schedule like, and how many hours a day you trade? Did you find that maybe trading a couple hours is more efficient than sitting and staring at the charts for 15 hours? Or
Yeah, so overall it's quite boring, but I like it that way because it's structured. And the type of person I am is, if I'm not structured, I'm just quite chaotic. I'll just go off and kind of pick up anything, and if I fall out of my routine, it's very reflective in my results. So I keep it very simple. A lot of time I'm just up at 6:30 in the morning, at my desk by like 7:30ish, in my trades within 7:30 to 9:30 to 10 o'clock kind of Irish time there. So I'm only trading the London session. I'm in it for, like I said, about 2.5, 3 hours. I'm looking for specific entry off of specific criteria. Usually I know the night before, and because of the way I've developed my edge, I basically, I suppose in a basic form, you could design it, say that it's almost like a template. So I'm looking for specific closures and things like this. And then obviously I have my statistical edge. And on top of that, when I'm looking for the entry in terms of what direction I'm looking for, very mechanical, etc. But really after that, then it's gym, and I'll come back. And in the evening time, then it's just about doing a daily report card, reviewing my trades, seeing what I could have done better. What was that golden setup of the day that I might have missed, and that maybe didn't even fit my edge, but I want to document it, because if I find personally that if you can even document them over a long enough time period, you almost have a playbook then at the end, when you come to the end of the year, for maybe something that I might want to develop in the future. Because I even saw you talking recently about about how markets change, and that's strategies change. And especially from a statistical point of view, if I'm trying to almost fit a strategy from historical data, you have to be able to adapt as well when things go wrong, and then obviously get out of that strategy and have indicators for when that strategy isn't performing the way it should be as well. So yeah, it's a very, very kind of basic day layout. I'm sorry it's not more entertaining, but that's just kind of the real side of it,
That's actually we were trading live FOMC yesterday, and first we had like 30 people join Discord live via chat, voice chat, and we're sharing screens. And the FOMC statement comes out, and it's pretty neutralish, nothing unexpected. So then the press conference is 30 minutes later. Yeah. And I tell everybody, well, there's not much to do right now. We have to listen to the press conference. And I see people slowly dropping off. And I kind of figure out they thought, oh, this is FOMC, they sitting with fireworks ready. Let's pull the trigger, and all that stuff. And in reality of trading is that I'm just telling them, this is what trading is. It's sitting on your hands. It's not really buy, sell every 30 seconds. You're in some action or yell at the screen or something. It's not an action movie. It's actually the opposite of that. And the reason for that, trading attracts a certain, like I said, it attracts a certain personality. They have some kind of, you have to kill the gambler inside of you in order for you to become a profitable trader, not to be a adrenaline seeking junkie, an action seeking junkie. But you have to become profitable, you have to become the opposite of that. You have to be cool, disciplined, and that's where the routine comes in. Every single person, every single trader that I've met worth their salt, they all repeat the same thing about the routine, that you have to have the routine that keeps you in check, in line. Otherwise, once you get out of the routine, you start, then your mental state changes, and then you start making mistakes, and then it's a snowball effect into, pain. And the only way we've learned that is because we've went the other way and we got our asses kicked. So we're not, all right, I'll stay in my lane, no problem. So
yeah, I even think that having a lot of clarity behind what you're looking for helps in that process of sitting on your hands and kind of playing the game correctly. Because if you don't have clarity behind what you're looking for at the end of the day, you're going to see every bit of movement as opportunity, right, when it's really just movement. You know, it's from a trading point of view and an odds point of view, it should mean nothing to you if it's not within your trading plan, you know?
Yeah, absolutely. And you've mentioned something uh with the with trading certain, for example, I found out that it benefits me to trade certain amount of hours, meaning I know that when I was younger, I'm in my late 30s. So when I was younger and we're trading for this prop firm, I would trade European hours. I would trade from London Open. I would trade 3 a.m. to like 5 a.m. New York time, and I would make within the 2.5 hour period, I would make a lot of money. And then I would be thinking, all right, now I have to schlep to the office by 7 a.m. And just because it was in my early days, and I still thought that I need to go to the office because I treated it as a job because I still had a job mentality. And I would completely give everything back in the US session. So my boss, he comes up to me, he's like, listen, this is not a factory where you have to stand for 9 hours putting widgets into something, right? You clearly have a statistical edge from 3 to 6 a.m. Stay the fuck home, just do that, and you'll do fantastic. And if you want to come into the office, just shoot the shit or just absorb, no problem, right? But just be aware of. My cat is trying to make things exciting. So be aware of the of your statistical edge at certain hours. And there was a Market Wizards book. There was a big Chicago pit trader, oil trader. This what he used to do the same thing. He would trade from 9 to 11 a.m. or 8:30 to 11 a.m. in the pits. Then go for lunch and give everything back in the pretty much everything back in the PM session, until his risk manager told them, listen, this is why it's important to keep the journals. That's what I'm alluding to, because a lot of kids, they think, oh, press the button. Nobody wants to keep. I personally keep journal. I found that keeping journal makes me a better trader. Even with all my experience, I still keep my journal, because having that dedication makes you very selective with your trades. Because when you don't keep the journal, every opportunity, every market, every candle looks like it's an opportunity, and you start getting into subpar stupidity, basically. And so keeping the journal will allow you to be more selective, keep you disciplined, and you will at the end of a year or month or quarter or whatever, you do a little bit of not a little bit, but you do a review of your trades, and you'll find out, all right, maybe I shouldn't take this type of trade, but this one seems to be the one who's that's the one that makes me money. So that's the one I want to concentrate more, or at least take more aggressive position sizes with these type of trades, and reduce my position sizes with these type of trades, et cetera, et cetera. So routine, and again, and it all comes back to the discipline, having the the discipline to keep track of what you're doing, because a lot of people approach it, especially novice traders, they're only thinking about Ferraris and Instagram lifestyle and the jet, and when can I put the picture of me with a hot girl or whatever, right? At the airport with the jet or some nonsense like that. This is what they're all thinking. They don't see the nitty gritty of the business, and the nitty gritty of the business is actually hard work. And it maybe now you know that you trade on the London session, but I'm sure maybe in the beginning of your journey, you still had it wasn't a 2-hour, 3-hour long ordeal. It took you a certain amount of years to get to the point where you now know, okay, this is my zone when I'm in the zone, and this is what the appropriate time for me to execute on my statistical advantage, and take advantage of my statistical pluses and everything. So, even later on in the day, like you said, it's the gym and it's a review. And I think a lot of new traders should, I know a lot of them will be looking at us right now and thinking, oh, fuck that, I'm not going to do that, I can get away with it. But and I have a lot of people who are trying to help and mentor, and until they start keeping the journal, and I don't tell them to keep, I don't need a journal of Barbie doll. I don't need 20 pages worth of journal. Just take a screenshot what you were thinking when you were entering the trade, show me the result. By the way, I'm quite interested about how you keep your journal and how do you look statistically with the what's your if you can give us a little bit of a source, maybe, because for somebody who's more mathematically inclined towards somebody who's more visual, or somebody who wants to do fundamental analysis, maybe you
Yeah.
can just briefly mention.
Yeah. So you know, it's although it's quite similar approach to yourself as well, because I am quite visually like a visual learner. A lot of the time, you know, even from a strategy point of view, when you're developing it, I would often start visually, you know, from like the visual patterns that I would recognize, and then I start peeling them apart. So I think, yeah, like you said, you know, you want to, obviously before and after pictures, you want to know why you got into the trade, why you got out of the trade. And you know, I think a big part as well that people get wrong is they start journaling the trade immediately once they're out of the trade. And I think you should leave, you know, obviously it depends now on what type of trade you are. But for me, you know, I'm more intraday kind of swing. I'd be in the trades. I used to be only in my trades for about an hour or so. Now I'm kind of in them for about 3 to 4. Just kind of broadening my playbook a little bit. But I would leave. That's why I leave my daily report card, my journaling till the end of the day, because there could be necessary information that I'm missing out as London opens up, where, you know, maybe it was a type of day with a certain template that I could have held that trade through New York, and that could have provided me necessary volume to maybe target the opposite side of the week or something like that. So you want to make sure that you're leaving enough time between where you executed the trade and your journaling as well. And then, you know, obviously I would dig deep into, you know, the details as well. Like, you know, are you being too conservative or too tight with your stop loss or even target? You know, I think the common thing we see online now is like, you know, these ridiculous high risk reward trades that is just not sustainable. Like it's even from if you try to scale with those trades as well, you are going to have no, like your hair is going to be falling out. You're going to have no social life because you're going to be so stressed, and it's just not going to work. So even for traders now, if you can design your strategy in a way already thinking ahead from a scalability point of view, it's going to help as well. So, you know, really don't be worrying too much about the 10-hour trades, but still look into your daily improvements. I think they compound over time. I think, you know, everyone here can say that, you know, you didn't come into the markets knowing everything. You came in and, you know, you just continue to work at it, and you kind of build that intuition through experience and learn your way. And that's the only way, by journaling, because it's only when you stop journaling and you come to a problem that you wish you journaled, because now you don't know how to identify where the problem is. And then you know, it takes longer to identify the problem, and you're in the pit for longer, then wondering why isn't this working. So even if you can, you know, with your mentor, develop some sort of process for being able to dissect problems as well. So understanding the mechanics of your strategy, what isn't performing as well or as sharp as it used to, and then bringing your focus to that pillar of your strategy. You know, different things like that. I think if you can build playbooks as well for journaling, I think it's a lot easier, because if you have a playbook, number one, you're going to have clarity. So that makes the whole execution process a lot easier. It's removing a lot of the psychological friction because you're not second guessing, you know what your playbook is. And then obviously the other side of it is like, if you have clarity, then you can go in a lot easier to just dissect your playbook. You know exactly what trades you have. You only have maybe 2-3 setups that have some sort of a statistical edge. It's not like this broad view of a kind of more discretionary style where we'll just throw this pattern in here and here.
Right.
It's a lot easier to dissect, especially then, like I said, from a scalability point of view and all of that. It just makes life a lot easier.
Absolutely. And I can't reiterate it enough how important it is to do the work and actually see that, because that's what happens when you don't keep the journal and when you're doing a lot of willy-nilly discretionary trading. That means you just thinking, oh, this is a good candle to whatever, for whatever reason. So you're just an emotional responding to some stimuli that the market is throwing at you. And professional traders, the market is designed in a way for you to be deceived. That's why all these novice traders, they always I was literally, again, I was sitting yesterday with the FOMC, and I'm showing them, see, this is where the people were entering because they thought that this giant candle will continue up. And the minute it took out the previous resistance, it turned around, and then it took out the stop levels. So they got liquidated. And I'm sitting there pointing this all out. And that's what a lot of, just because I have the experience, but a lot of people, they start chasing markets and they don't have the, they think that you need 20 different ways to make market, and whenever you feel like it, you get into the market. No, you have 1, 2, 3, whatever, one or two bread and butter trades. Maybe you would like to deviate a little bit and play around once in a while. Again, I was talking about with Robert, our mutual friend, trend trading, and sometimes I do mean reversion trading. But I only do mean reversion trading, for example, when there is a statistical. So when the market moved a certain amount, 2 standard deviations from its norm, and there wasn't really a catalyst for it. So I kind of want to stack probability when I'm going to start fading moves. I will do it only in certain times, and again, it's a very that's not my bread and butter type of trade. This is me, but bread and butter. So you're supposed to have 1 or 2. At least for at the beginning, have 1 or 2 setups that you've observed over and over and over again. And it doesn't mean that they're going to work 100% of the time. Nothing works 100% of the time. You just know that they're going to be working, let's say 70% of the time or 60% of the time. And then you adjust your risk to reward. And to go on a tangent a little bit, it's funny that I've started noticing last couple of years with ICT and smart money concepts that all these kids are showing me 1 to 20, 1 to 10. I'm like, Jesus Christ, because it looks good, right? Yeah. Oh, sniper entry. I'm like, dude, you're gonna, yeah, 1 out of 10 maybe will be a 9 out of 10 of those will be stop losses, if not more. And again, a very good advice is look forward. Don't just look in front of your nose, as Sean pointed out. But think about it. If this is your career, you need to think ahead of. You have to think years ahead and plan accordingly if you want to succeed faster and do better, and not box yourself into some not idiotic, but silly way of trading. Do you currently mentor? Do you currently provide the?
Yeah, so I do. So I work with a few students, and basically we're just always working with the data, developing statistical approaches, talking about psychology, things like that. It's a lot of hands-on work, to be honest. Because when people join, obviously, like you said before, when people buy courses and things like this, they almost get like a false expectation of what the reality is. And then when you kind of start bringing them down the rabbit hole of how long this is going to take and the work that's needs to be done, and the true expectations of what any strategy, for example, can deliver, and the probabilities of that and how random that is when it comes to the distribution of wins and losses, all these different things that you need to fix as a student comes to you, it takes a lot more work than people think. But unfortunately, that doesn't sell. And that's exactly like you said. If you, like you were sitting on FOMC and things like that, if you tell someone that, guys, we have to sit on our hands here, or if someone comes to you for mentoring and you have to tell them, well, you have to take away all of that high risk reward, you have to come and develop a consistent process, and it's going to take longer than you expected, more money than you budgeted for, and more hard work than you've probably ever worked in a 9 to 5 or something like that. That you can't sell that, but you can sell that. Hey, if you follow my strategy, I'm going to be able to get you high risk rewards where you make 30-40% a month and live in the Bahamas or something crazy like this. Like, that's a lot easier to sell. So, I think if people actually use their heads a little bit more when it comes to getting a mentor, like even some kind of critical, logical thinking, common sense, if someone's showing you statements there where it's like 30-40% return on a month, go put that into a compounded calculator and you'll quickly see how nonsense that is. If you're getting to the stage where you're able to turn 3 to 5% a month, you are an amazing trader. Like, you are doing great. And I've had people come to me before. There's this one specific individual who always sticks in my mind, and he came to me and he was saying, he was like, I can't seem to get past 3 to 5% a month. I feel like giving up. I don't know what to do, blah blah blah. I'm looking at this individual like, you are so much further ahead than you could have ever imagined, and so much better than you even realized. But these are the false expectations that are being shared constantly on Instagram, and other social media platforms.
Yeah, and that's the unfortunate aspect of the business. I before we launched FundingTraders, we had an educational arm as well. It's when you're trying to tell somebody that it's going to take you about 1 to 3 years, realistically speaking, of hard work for you to become somewhat decent. I'm not saying you can't be profitable in 6 months, but usually maybe you agree, maybe disagree, but I found that at least a year of hard work is where it's at before you can start swinging your schlong around, right? So that's, and when all these kids see Instagram posts of these or YouTube, whatever, and they see whatever, within 30 days you'll be making the 10 grand a week and blah blah blah, all that nonsense. And but what I found once we launched the educational arm, when you actually do videos and you're trying to tell the truth, nobody comes, nobody gives a shit. Everybody, and whenever I did a title, how to make $3 quadrillion in 2.5 seconds, I get tens of thousands of views. Everybody's happy. I'm like, this is nonsense. This is absolute nonsense. What are you guys doing?
Yeah.
So, how long did you see? What's the average of person you would think, realistically speaking, from a real world perspective? How much time would you say it requires for somebody to go from novice to maybe some basic ABC knowledge of FX markets or trading to somebody who can actually sustain and live off of it, so to speak, become a professional? So,
well, I would say living off of it would be even a completely different scale to getting consistent. So, you know, like if you have someone coming in who has basic knowledge, has picked up some bad habits, thinks they have clarity, but they don't really when you analyze it. You can usually start getting them to consistently, you know, within a few months, if they're actually, you know, taking on the correct guidance. You know, if they have some sort of mechanical strategy, especially, it's quite easy to dissect that. A lot of the time, it's kind of dealing more from the psychological point of view with them. You know, some bad habits, maybe their view on money and risk, the view of uncertainty, their view on uncertainty in general, and you know, the randomness of the market. A lot of those things, you know, usually when we kind of target them, once the edge is kind of develop more clarity around that, you're going to see a lot more progress quickly. But you know, then it comes to a different stage. You get past one problem of, you know, reaching the break-even stage. Then you get to the next problem where it's like, okay, now or next success where it's like, I'm consistent now. And then, you know, the next step then is, okay, if you wanted to go, you know, full time, you now, let's say, leave your job and you're coming to the desk, and let's say you've 2 hours to trade on London and you're trading the same strategy I do. You now have all of these hours of the day to fill once you never had before. And people don't take that into, you know, into perspective when they do go full time, because it happened to me personally. You know, I was like, wow, this is amazing. I have like 8 hours a day of trading here. I'm going to triple my results. And if anything, it did the complete opposite of that. Because I had too many decisions to make. And it's, you know, it's one of those things like mental capital is precious. Willpower is limited. And therefore thinking power is limited. And that's why you want to assign it to just those good decisions a day that have clarity around them, that makes sense from a statistical point of view. So, you know, I would say if you're coming in with experience, yeah, you know, you can get to a consistent stage within a few months with the correct guidance. But really then from a scalability point of view of moving full time, I would definitely say it's very, very personal to the individual. You know, some people are much more able to adapt quickly to their environment, much more able to learn from their mistakes and kind of be more self-aware about, you know, I have all these hours of the day, I'm making poor decisions, and quickly fix it. While others, as you know, will keep repeating the problem, and before they know it, they're back, and then they have to start all over again, and et cetera, et cetera. Right. So I think it's quite personal. But there's different stages to that as well.
Yeah, that's absolutely true, especially removal of the baggage. It's so a lot of traders start with a whole lot of obviously barrage of information, and that's what Mentor helps them to achieve, is distilling and through the process of reduction. So you reduce this noise, that noise, and you're left. There's a famous joke chart in a Forex world where there's like a chart with like billion lines and moving out everything and 20 indicators and all that stuff. And that's pretty much the beginning person's mentality. The more shit I throw it at, the more. But then one is going to tell you up, one is going to tell you down, another one will tell you quit it
I think that's
immediately.
a good way to almost get started, though. You know, like that's the way. I know it is crazy, but being able to develop more of a broader view, and going through that phase is necessary in itself as
Absolutely.
well. Because that's why I was saying earlier on this podcast that you want to gather as much knowledge as possible and go in with the point of view that it's like, okay, I'm not trying to structure this at the moment. I'm just trying to learn the game. And in order to learn, you have to experience those things, like you said, the
Exactly. You have
chaos
to
of
play with it.
indicators. And then get someone to structure that information for you, and you're going to get to where you want to be a lot quicker, you know?
Absolutely, absolutely. And we all, like you said, we all start with that because we have to play around to find out what you like, what you don't like, what resonates with you, what doesn't resonate with you, and the proper balance. With the mentor, you can achieve that just a lot more quicker, efficiently. And on that note, if somebody would want to find you somewhere, where could they go if they want to talk to you or find one of your products, or do you have a website, Instagram? Where can we find you?
Yeah, so you can find me on Instagram at Conquer_FX, or on Twitter it's just ConquerFX, and it's the same on YouTube as well. So I'm basically on the majority of platforms there.
Sounds good. All right. A website or?
Yeah, so if you look up ConquerFX as well, it'll be the first one there. With the logo
Sounds
as well.
good.
So it's all the same. It should be.
Well thought out. Now it's
Yeah,
at least you have consistency in this
exactly,
one.
in all aspects of life. Yeah.
All right. On that note, I really appreciate you taking time in the last minute. Well, we arranged this small get together, and thank you, Robert, for making it happen. I hope we can bring you on another time, sometime in the future. Maybe we'll get into more detailed type of talk. We can talk markets, etc. But I hope a lot of our viewers today found a lot of this information useful, especially people who are starting on their journey or they're in the initial stages of the journey. Listen to these advices are pretty much a lot of traders. We repeat ourselves a lot of times, but this is the truth, because every single person who became successful in trading had to go through the stages and get to those truths, at least in trading. So I want to thank you, Sean, for coming over and doing this on a Friday. I hope you enjoy your weekend, and I hope we'll do it real soon again.
Appreciate having me on. Thank you very much.